Is the decline in the NASDAQ today specifically because tech will be affected by a crackdown on Chinese investment, or is that making way too much of it?
Yeah, I think it's tech, as we all know, has had a wonderful run here, and it has come to the end of the quarter. I think there is some rebalancing going on out of tech because of it's had so much strength. And frankly, tech does, in some sectors, benefit more from trade than other parts of it, but I think this is more technical than part of the big trade picture.
And so if that's the case and people will go, oh, you know, we're selling this and, you know, we're concerned about these headlines, does that make you a buyer? Do you have any interest there or not yet?
In value tech, it won't be surprise you, Kelly, that we're going to be looking for value names, and there are some value tech names. Our favorite, actually, in large cap is Oracle, which is going to have double-digit earnings growth. They still have wonderful moats around their database business, and yet trading at about 12 times earnings. So there are big tech names that make sense, but Netflix and Twitter up 100% each, not so much.
All right. And Kevin, what about you? I mean, are there places that you'd be a buyer of? Are you concerned that, you know, their prospects will be affected if the Chinese market is less of an opportunity?
Yeah, I didn't like that news today, and I'll tell you why. A tariff is measurable. When you go in trade wars and you slap tariffs on different product groups and sectors, you actually know right down to the cent what's being applied. But this CFIUS stuff is a process, and what I don't like about it is the U.S. market is always the #1 place to bring capital to invest, or always was. And now when you start to think about companies that want to get into AI, for example, and may want to buy companies or get bulk up through acquisitions, they don't know the outcome of a process. It's not like a tariff. It's something that you have to go into with an uncertain outcome. And I think that scares capital away. You know, China's graduating over 250,000 engineers a year now. They're getting very competitive in what they're doing in data mining and all kinds of new technologies. And I think we're scaring capital away from those who would want to invest in that kind of thing in the U.S. I was not a fan of that news. I prefer tariff wars that can be turned on and off. This is just more government getting in the way of capital flows. And to me, that's negative.
And I wonder if there's even more to come on that front. I guess it's up to the administration at this point.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.